Today on the Joseph Hayward Show, we'll be discussing 4 different loan types in under 5 minutes. I'm Joseph Hayward. I'm here with Joe Oschlegel from Advisors Mortgage, and we're here to discuss the 4 different loan types that are available for mortgages. Joe, first mortgage that comes to mind is FHA. What is FHA and what are the advantages of it?
FHA, it's not so much, it is a first-time homebuyer program, but it's a low down payment and they don't beat you up for credit score quite as much as other loan programs do. 3.5% down usually gets you in. They do charge monthly and upfront mortgage insurance, but that's kind of the cost to put so little down.
Now, the next loan type is conventional. What is the difference between conventional and FHA?
Conventional, they don't charge upfront mortgage insurance, but they will beat you up a lot more than FHA does for credit score. That loan type's much more heavily reliant. They do have 3% first-time homebuyer programs. Typically, it's a 5% down payment.
Now, when you say beat you up on credit, what do you mean for the general public who doesn't understand that?
So for top-tier credit starts at about 740. Every 20 points or so, you drop. So 720, the rate gets a little worse. 700, it gets a little worse, so on and so on, until you reach somewhere in the 600s where it becomes cheaper for you to do an FHA loan.
Okay. Now, the next loan type that comes to mind is VA loans.
Yeah, VA loans are great. 0% down. If you served and you were honorably discharged, they don't carry any mortgage insurance upfront or monthly. And it's a zero down program. It's great, and the rates are usually equal or under to FHA rates.
Okay. And last but not least, we have USDA.
USDA, it used to not be too available around here in New Jersey. It's from the Rural Housing Service, but they've expanded that area, so that's another zero down program, but it's a little tougher to qualify for as far as there's income limits, and it matters where you're going to buy because not everywhere in New Jersey will use USDA. It's supposed to be a more sparsely populated loan.
And now USDA, as I understand it, one of the advantages is 100% financing.
It is. It's a zero down program. They carry mortgage insurance, but it's not too bad. Like I said, they have income limits and geographical limits on where you can buy and what you can make to qualify. So it's a little harder, but if you can get in, it's just as strong a loan as conventional. Now,
in an area where maybe USDA is eligible and you also have FHA for a first-time home buyer, which loan are they better off going with, and what are the advantages of one over the other?
It all depends. I mean, USDA would be cheaper just because of the upfront monthly mortgage insurance. It's less than FHA's. If you can qualify, I would do USDA, all day long.
Okay, and now earlier you had mentioned that conventional has a 3% down payment program. Now, what is the advantage of going with a 3% conventional down payment program versus going with a 3.5% down FHA program?
The conventional does not have that upfront charge, which is pretty significant from FHA. It's 1.7% of the loan. So basically, you borrow $100,000, you're financing another $1,750 on top of that to pay FHA to do the loan for you. The conventional part, the Home Ready, it's called, it's 3% down, so it's even less, but it doesn't have that.
So there's 2 other loan types that we didn't discuss that are sister programs to other ones. The FHA 203K and the Homestyle loan. What are those 2 loans?
Those are for renovations. The Homestyle is it's a conventional product, and the FHA 203K is obviously FHA. So basically, some of these distressed properties that you're trying to sell that nobody wants to buy, you now have the opportunity, the borrowers can actually finance repairs instead of buying for $100, putting $100 out of pocket into it. Now you can do that all in one step, and you borrow all the money.
It's basically renovate your home and get the money to do it.
Yeah, for a borrower is looking for a lower, cheaper property, especially in this market. Yeah, you can buy something that's distressed and fix it and make it whatever you want.
Well, there you have it. 5 loan types, under 5 minutes. I'm Joe Haberl from Arsha Real Estate. You can always reach me at 833-44-SURE Or you can reach Joe here from Advisors Mortgage at 732-581-2738.